Everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the UAE, which makes it very early in other places, and I suppose a little bit later if you're further east than us. Brent crude oil trading little change this morning at $61 after a sort of significant decline yesterday. The news driving prices down, which pushed WTI firmly below 60 at $58. But we have the news again, sort of the building news and anticipation for the next OPEC Plus decision. And we had the Saudi Arabia messaging through channels that they are prepared for lower prices for longer, and signaling that OPEC Plus, when they meet on Monday, would drive prices, would drive supply, increase supply again next month, like they are doing today, the 1st of May, which in its day is Labor Day. And so happy Labor Day to everybody. Let's kick off this morning in London with Livia Gallerati, senior oil market analyst at Energy Aspects. And Energy Aspects are certainly known for their close awareness as to what's happening in Saudi Arabia. So, Livia, my question to you is, what is driving Saudi Arabia, if one takes this this collection of decisions now and this latest one? What do you think is the main reason Saudi Arabia is pushing for increasing supply in what is clearly, by all measures and everybody's analysis, and even last night, the U.S. Economy shrinking in the first quarter? This is a low demand window, and yet OPEC Plus is increasing oil supply. Why are they doing that? What's the sort of single most sort of identifiable reason that you think they're making those decisions?
I think in one word, it would be under compliance to the cuts that have been going on for the past few months. There's obviously been some growing discontent in the group, chiefly Saudi Arabia, but some of the other members who have been delivering on the production cuts for as long as they've been in place. But we know that some other members of the group are not exactly doing the same. Kazakhstan obviously comes to mind, but it's not the only one. So effectively, Saudi Arabia is grown a little bit tired of pulling, everybody, dragging everybody along and doing everything sort of on its own, along with a couple of other producers in terms of delivering these cuts and these production increases. And, we've seen them in April, we've seen them again in May, and the expectations that we're going to see another large increase in June and potentially beyond as well. It's a firing shot. It's saying to some of these producers to get in line and do their share.
Let's welcome back to the table Arne Lohmann Rasmussen, Chief Analyst and Head of Research at Global Risk Management in Denmark. Arne, sort of same question to you, and then maybe ask an additional one regarding the announcement overnight of a minerals deal finally signed with the US and Ukraine. Does that get us anywhere closer to a deal with Russia? But first, the main motivation for OPEC Plus.
Yeah, good
and
morning.
For Saudi in particular, it seems.
Yeah, good morning and happy Labor Day. Yeah, it's a good question. Of course, as Livia said, the sort of punishment of Kazakhstan, Iraq, maybe the Emirates as well could be one good reason. I have a feeling that this is also about market share, not just about market share internally in OPEC Plus, but also a market share against non-OPEC producers, of course, notably the US. It has a kind of deja vu to 2014, 15. So if they want to hurt the US producers, this might be the time to do it. And by the way, they can also send a sort of a strong signal to Trump that they are on his line. They are aligned with his agenda about lower oil prices for a while. But I think if there's someone who's not happy about what's going on, it is U.S. producers. They woke up to a shock when Trump came in. They voted for him, they endorsed him, but they got what they asked for. So I have a feeling this is also about a change of strategy. This is a market share strategy, and that's much more sort of serious for the oil price, because then it's not just temporary until Kazakhstan falls in line. This is more fundamental. And just to those who cannot remember, oil prices dropped from above 100 to roughly $30 when they started the market share war in 2014. So we're not there yet, but it smells a bit like it. So they solved three things. They put pressure on Kazakhstan, they put pressure on US shale oil producers, and they sent a strong signal to Trump that they are open for a deal, or whatever he would call it. So I'm actually quite bearish on oil now. This could be a sort of a fundamental change of the oil market, and especially I think how investors will look at this. Nobody dares to touch oil when Saudis are playing with market share.
Ian Nathan, let's go to Ian Nathan, Director Global LNG Research at Energy Intelligence. Nathan, just picking up on that point, pleasing Trump, not pleasing Trump in terms of the oil price being of some support. But looking at from an LNG point of view, has the first 100 days signaled? I mean, the LNG people were moaning all last year because Biden put a temporary pause on new licenses. Has now the new dawn arrived and everybody's dancing on the fields doing Kumbaya LNG party? Or what does the LNG universe of America look like now, 100 days into Trump?
Well, it's ironic that the prospects for even lower oil prices, based on what you folks have just said, but also, resulting from a tariff scenario that weakens economic growth globally even further, it just seems to contravene the goals that the Trump administration had been laying out for energy dominance. You have a couple of factors here. One, you do have some regulatory tailwinds, which are beneficial. In fact, some of the liquefaction projects that we had expected to reach FID in 2024, but were held up by the Biden administration's pause. We think they are poised for FID this year. We are watching buyers to see how they are attempting to gain favor with the Trump administration. There's certainly no shortage of them. But again, it is worth noting that all that's great, except for the fact that in a deteriorating market environment, those project fundamentals are deteriorating as well. And that's just making it much more difficult for deals to be signed. And that's even more problematic for those who require them in order to get their financing. So, on the one hand, you do have some tailwinds, and on the other hand, you have some difficulty that's made worse by shifting U.S. trade strategy.
Livia, just picking up on some of those themes there, is a lower oil price, the Saudi strategy, as you identified, the main driver being sort of OPEC plus discipline, bringing back or attempting to bring back OPEC plus discipline? Does the consequence of that, i.e. lower oil price, does that serve Donald Trump and the Trump administration positively? Are they happy, or is it negative that one of their major stakeholders, i.e. the oil industry, is now suffering a lower revenue year? How do you see it playing out in the context of a big stakeholder, the U.S.?
That's an excellent question. And I mean, one of the things Donald Trump was saying as he was running for president and at the beginning of his administration was, I will bring down the price of oil, right? And you can argue he's achieved that, except he's done it instead of by, unleashing more US oil to the market, which was what he wanted to do. He's potentially triggered a global economic recession thanks to his policy on trade. And the lower oil price that, as you've mentioned, Sean, it's going to make it very difficult for US producers to grow production at all. And if anything, if we keep moving in the directions where we're headed now with OPEC Plus quite likely to be adding more production in the coming months, we're probably going to head even lower in flat price. Like probably somewhere in the 50s is something I definitely wouldn't rule out at this point. So yeah, I mean, lower oil prices are de-inflationary, but then if you put it in the context of tariffs on goods imported into US, I'm not sure that offsets that, right? So we're heading into a very bad direction for the US economy, for the Chinese economy, and by and large for the global economy. So it's not looking like a rosy picture for the second half of this year and into 2026, unfortunately.
Arne, if we just pick up on the second point of the question I was asking you earlier, which is finally this big deal that Trump has been chasing with Ukraine for some time, this minerals deal where the United States would somehow get access to the rich mineral resources of Ukraine in return for their continued engagement and continued support of Ukraine and the reconstruction of Ukraine, or whatever the list of benefits that Ukraine get out of this. But my question is more about, is this a bearish or bullish for the oil markets, for the energy markets, i.e. in the sense that it appears to keep Trump and the US government locked into supporting Zelensky and the Ukrainian government and their position in this war, and perhaps the longevity of this war? Your thoughts on this decision, its tangible nature, if indeed it does result in digging stuff out of the ground, but from the point of view of the energy markets, are we closer to a war ending or further away because now America is more embedded with Zelensky?
It's a good question, and the question is, of course, also how embedded are they in reality?
Apparently, it came with no defense security guarantees.
Exactly, and we all know that tomorrow Trump can turn around 180 degrees, but it seems like there is a change in rhetoric that the Trump administration is preparing. I think especially the MAGA voters, that they are changing their view a bit on this. I think it started after the Pope funeral last week, when Trump said that maybe Putin is fooling me, and obviously he is. But if they're realizing it's a good thing, so yes, it's a deal, and over time I think it's going to support Ukraine. But as you said, there's no security guarantees there. But I think it's a small step towards that the US is on the right side of history. Are we moving closer to a peace, a ceasefire? I'm not sure. It doesn't seem like Putin is just dragging his feet, doing anything. But yes, maybe a small step, and Putin knows that the US actually also have a foot in Ukraine. So overall, maybe a small victory for peace last night. Let's see how the deal itself develops. How much can they actually dig out? How much can they invest? How much is there? I think that's still an open question. I think a lot of people are a bit too optimistic of how many rare earth metals there actually are in Ukraine and so on. But yes,
there does seem to be some disagreement. I mean, as to the scale of Ukraine's riches minerally, but ultimately it's a ginormous country.
But it's a move in the right direction, and I think in a way we probably have moved closer towards a peace deal, because Putin knows he's now to a certain degree also fighting the US. So yeah, I'm slightly optimistic here. Maybe a final word, if I start talking on OPEC.
Yes, please.
You could say that Trump got his drill baby drill, but he just got the drill baby drill outside the US. Production, at least.
I'm not sure that's what he had in mind, but I suppose in some regards he has to choose between the lower prices versus the inflation challenge. I mean, this is perhaps where that is at. Ian, looking at this question within the context of Europe, and obviously the war, and as Arne suggests there, that maybe this mineral deal is a step closer to a resolution of the Russian-Ukraine conflict because it indicates to Putin that Russia is still engaged in a supporting position with the Kiev government. But LNG supply into Europe has been one of the big winners, U.S. LNG supply into Europe. I mean, if you want to call it a winner ultimately, but in these sort of using this language in terms of the end of the pipeline supply from Russia into Europe meant that the gap had to be provided from somewhere, and U.S. LNG is the big supplier into that gap. Does that continue? Is that locked in? I mean, a lot of that is spot. There's no long-term 25-year contracts like Qatar has with Korea or anything.
Well, it does as long as the region continues to need to fill that gap. U.S. LNG will be there, and if we're looking in the very short term, meaning right now and in the coming months, even though we're seeing a little bit of that seasonal marginal shift in volumes that we would expect, we're also very cognizant that Europe is really behind the 8 ball when it comes to rebuilding storage, and that's in progress right now. And so, even though storage is recovering, and it's sort of building back toward the 5-year average, it's still a long way to go for it to reach the levels that are expected by Brussels, and of course, the peak that it reached in 2024, and just more broadly. The U.S. LNG is just really too big right now with regard to its role in the global LNG trade. And certainly in 2026, as new supply comes on, U.S. LNG is going to represent roughly 40% of the new capacity that we're expecting to start up or ramp up next year. So, so this will continue to be a factor. And just over the longer term, a lot of the folks who've signed up for U.S. LNG recognize that at some point the European market might not be as robust, and that the Asian market will be the market of choice. And that is, of course, not a bug, but a feature of the U.S. system, where those volumes can be taken to wherever the market values them. And so that's our expectation.
Let's go to the survey question, which is sort of tackling some of these themes this morning as to what is the main reason Saudi Arabia appears keen to drive up oil supply and push down oil prices. We've had different answers. Taming wayward OPEC Plus, as Livia indicated earlier, and Arne mentioned that helping Trump 2.0 lower inflation, which is a big challenge to America now, particularly in the midst of this trade war. Or is it number 3, which is Arne indicated as well? Maybe it's a market share war piece that the Saudi Arabia is pushing, and with 3+ million barrels of idle capacity, it's given up a lot of market in recent years, or for none of the above. There's a lot of interweaving realities there, and of course, geopolitics and OPEC and so forth. Livia, looking into the kind of where this can go next in terms of the supply side, we've sort of touched on there, but where is the demand side? China, despite the expectations earlier in the year that it was a very negative outlook for China, now we've had obviously dealing with this the challenge from the US, which is still in its early days from the point of view of full economic impact from these 145% tariffs. But where does China demand, where does Asian demand look like? Typically for decades, the source of incremental oil demand. China's looked not so bad so far this year.
Yeah, I mean, look, I'm just thinking about some of the data that was released just yesterday, for instance, out of China, the PMI for April, very weak. Not expecting that to look any better in the coming months, to be honest. When we have looked and done some analysis of where we think this trade war might impact demand. Obviously, US and China are the main geography, but when it comes to the sectors that will be hit the most, things like petrochemical demand, so diesel, anything that has to do with industry, basically, bunker fuel, obviously, as well in relation to global trade. All of these things are very much at risk. We're starting to see some signs in the data that things are slowing down, particularly, I would say, on the trade flow side. You're really seeing movement of goods between the US and China already taking a hit quite significantly. I mean, there's some speculation in the market, and some people are taking recent statements from the US administration that maybe they might ease the pressure on China a little bit and cut some of those reciprocal tariffs. But even if you say they get halved, for instance, like you get to around 60%, that's still pretty much embargo level, right? So you're not really going to do much to help trade flows recover. So yeah, things are not looking good. We have already cut our global liquids demand estimates by 450,000 barrels per day for the second half of this year and 2026. And to be honest, the downside could be even larger than that, maybe even above 1 million barrels per day. That brings your global balances to a very large deficit and surplus. And if on top of that you add more OPEC production, then things are just looking very, very bearish.
Just to clarify on that
year.
point, with that correction revision downwards for global oil demand growth for energy aspects in the second half of the year, what does that make your forecast for the average for the year 2025?
So we're looking at around 700,000 barrels per day of global demand growth. So we are still growing, but it's a pretty weak level. And it starts to get close to historical precedents where we have had recessions, right? So definitely, and if we start seeing even more downside than we're currently baking in, then yeah, you could easily get to little to no growth at all this year.
Arne, looking at that, welcome your thoughts on where you see the demand growth this year, revisions downward, but also where does Iran play its part here? Not Iran, but ultimately the US maximum pressure sanctions. Another statement out of the State Department yesterday with fairly strong language for a country that it's trying to negotiate with. The first sentence in the statement on the State Department website is, "The Iranian regime continues to fuel conflict in the Middle East, advance its nuclear program, and support its terrorist partners and proxies." Doesn't sound like peace talk language. Your thoughts on where Iran plays the role in the balances here?
Yeah, definitely. I think there's been some optimism that there was actually a deal on its way between the US and Iran. They've been negotiating for like this a month now, or something like that, but I think they are fizzling out a bit. And of course, it puts things into perspective because it makes room. Of course, they would never admit it, but it makes room for the other OPEC Plus members to add a bit more oil if you take away maybe 1 million barrel per day of oil export. Yeah, I think it will end with the maximum pressure strategy, but of course they will try to see if they can get a deal. But it seems like the US has very tough demands on Iran. They will never accept it. So of course, if we should look at some of the sort of supportive factor for the oil price over the next 3 to 4, 6 months, it is definitely still the sanctions on Iran. They will make a difference. And I share your view. It doesn't seem like the US is going to make a deal with if they use language like this, but of course they put maximum pressure on Iran during the negotiations. We have to remember that. But in the end, I think it will end with that they will step up the sanctions. Talking about sanctions, of course, also we talked about Ukraine, Russia before. There seems to be a move also on the US side that maybe they will actually not just lift all the sanctions from day one. That they could actually tighten the sanctions, especially if Russia will not engage in real peace negotiations. The final question you mentioned, of course, oil demand and so on. I think we have to remember that we've been in a situation where there's actually been a lot of hoarding in the market. You've been rushing to push all the goods you can into the US. Inventories are full. This will come back with a vengeance now, because now you're just using your inventories, stopping production. Going to see some very, very weak numbers in Q2. Maybe the GDP numbers in Q1 was not that bad because there was a lot of negative impact from import, but that will certainly reverse completely in Q2 and probably also in Q3. So it's really a surprise that OPEC is talking about adding more oil in a situation where the two biggest economies in the world are trading with each other. That's a huge shock to the global economy.
Yeah, and we're only in the early days of that. Ian, on that question, and I wanted to get your thoughts on we are in the middle of the many things we're in the middle of. We are in the middle of this 90-day pause on the reciprocal tariffs, not the middle, nearly the middle, 1 month of the first 90 days pause for the US government to negotiate new trade agreements with, I don't know, 140 countries or something. One of the sort of main ingredients, it would appear, that would help to bridge some of the gaps, and the major players like Japan and Europe, and in the context of this trade deficit with the US, is the opportunity to buy more LNG, buy more gas. And a singular sort of signature, you could fill a lot of the gap. But my question to you is, how realistic is that? Can Europe take more LNG? Can Japan take more LNG from America? In the short term, in the medium term, is there capacity to consume that much more on the part of those countries? How big a solution do you think LNG can be to this, achieving this 90-day pause and making it productive?
Well, if you're looking at the roster of countries that are seeking to gain favor with the Trump administration, we are talking about Japan and India and Kuwait, Taiwan, South Korea, Bangladesh, Vietnam, the Philippines, and there are probably others. And a lot of those needs are different. So for some of those countries that may already be well supplied or not growth markets, they're pursuing strategies of access to US LNG, to resell and trade in Asia. So it's not necessarily about absorbing additional volumes. And some of those countries also have several deals that are expiring. So in some ways, they may have been talking to US developers anyway, to meet those strategic needs. I think that in terms of the realistic piece of this, will we see deals? Just referring to some remarks I made earlier, deteriorating market conditions and project fundamentals are going to make it a little bit more difficult for good deals to be concluded. But that doesn't mean we won't see preliminary agreements, which may go some way towards signaling to the Trump administration that they want to play ball, but without actually committing to a firm deal. So I think we should expect that could be an outcome as well.
Okay, well, we're going to have to wrap it up there. The survey results showing that the views in this room that market share is a market share war, which is obviously a big word, but ultimately it's nonetheless a fight driven by market share. The other big reason, taming wayward OPEC Plus members, helping Trump 2.0 lower inflation, doesn't seem to be getting much traction in this room. We will see where that survey goes as we post it out on social media today. But clearly, it's the answer to that question: what's driving OPEC Plus and Saudi Arabia to increase supply into a weak demand window, which in the past has proven to be quite a risky strategy, because as Arne indicated, in 2014, it pushed prices down by a third or something to that effect, or down by 2/3 if it was, I think I understood you correctly, Arne, from 100 to about 30. Back in the late 90s, the same strategy when we're fighting the wayward Venezuela at the time, which was pumping a lot more than quota and refused to bring production back into quota. And Saudi drove forward with an increase there that drove oil prices under $10 a barrel, which at the time was sort of lost value by half, from around $20 to $10. So clearly these are very high cost strategies to discipline others by boosting supply, but maybe there's other reasons other than that one. But maybe they're all of the above. There's the favorite answer. Livia Gallerati, thank you so much from London. Arne Lohan Rasmussen from Denmark, and Ian Nathan in the US. Thank you so much for joining us today on the Daily Energy Markets podcast, where Brent crude oil, as we said at the top, is trading a little bit down, but not. I mean, the big question, I suppose, for Brent is, will it break below 60? It's certainly getting close at 60.88 now, and WTI firmly below 60 at 57.99. It would seem all the downward pressure is in place for that to happen. And when the announcement comes from OPEC Plus, will that add extra fuel to the downward fire, or will it be a surprise? Oh, a surprise, we're only doing 1 month's increase, so prices jump up, as OPEC Plus does, and Saudi in particular, like to surprise. So maybe that could be on the surprise menu. Thanks very much, everybody. Have a great day. All the best.
Bye-bye. Thank you.
Thanks.